All right, I'm back. Got something to eat. And now let's finish what we were doing. So, we were in, we just finished journaling the trade I took on Friday, but I want to analyze the market a little bit more in detail for Friday, looking at other possible trades we could have taken. So, let's go ahead and do that. Let's pull up the journal here. Let's say now I am also going to be taking a look at what else happened on Friday and other trades you could have taken. So I'm going to get out on the right hand side of the screen. I'm going to get out everything else that I need to get out. So yeah, I'll start from the beginning. So going into the day Friday, it took me a little bit of time, but eventually I realized that where is it? Let's give it a stat map here. Eventually I realized that we swept out. Let me get this. Pull over here. Oh, let me also get the chat pulled up on my phone. Okay. Right. There we go. Chat's pulled up on my phone. So I noted that we swept out Asia and AM, so I seemed pretty reasonable to possibly be drawing towards London, Asia, previous day's low, and then the daily distribution level as seen right here. And then as well, we had the weekly distribution level, and we had previous week's low, which was right, previous week's low, and previous month's low, which eventually got hit. Previous week's low, and previous month's low, all of which got hit. Let's get rid of that. And yeah, this was the idea, was like we had all these draws below us. Alright, let's put this here. Realize that we swept out Asia and AM's highs perfectly into the stat daily and 12-hour stat map levels. With really good draws on liquidity below us and the higher time frame being bearish, I eventually was able to frame my bearish bias for the day. I don't know if that makes sense. Hopefully that makes sense, but yeah. Anyway, let's get rid of this. mean, what do we even look at here? We take out all these draws on liquidity. Let's get rid of everything here. So yeah, like I said, we swept out. I might redo this picture. Let's redo this picture. So we have AM right here. So New York Asia AM high. And then we got Asia right here. Sweep out both of these into our daily stat map level. Let me pull that up. Yeah. Here's the stat map. Yeah, we got historical sessions. You can see we pushed right up into this daily manipulation level here. And then, like turning on the 12-hour one, same thing. Did we push into any key level here? I'm curious. I mean, it was really just this giant OB. Yeah, it was really just this giant OB here. Like, if you look at this. Yeah. Know how we came up, swept out Asia and PM. then pushed into this final move up before the larger move down on the 30-minute. This was a 30 this is a decent signature in price for a good OB. Then we had London down here. You could also consider this a breaker block. So we had London below. We had London's right here. And then we had Asia right here. And then we had previous day's low from all the way over here. So just a lot of liquidity below. And then we had our daily stat map level right here. Okay. So on the lower time frame, Yeah, I honestly don't. I don't know what to say about the. I don't really know if there was a lower time frame entry. Honestly, we left equal highs here. We'll probably come back for those. I mean, this is a data high as well. And that's relevant for later. Um, then once again, we had below further down, we had the weekly distribution level right here. Note we have, once we hit this, we have a slight retracement. Pretty crazy. The market's respecting these statistical levels here. Clearly it is. Then previous month's low. Previous week's low. And previous month's low. Ooh, just a little further down. So not even sure like what other trades could we have gotten besides this one right here? Like obviously we have this. This was the one that we spotted, right? Breaker. But what other trades were within this? Let's try and figure this out. Because we knew we were drawing lower here. But what other entries could we have gotten? I mean, there is an inversion right here, but I don't know if the higher time frame model had been framed yet. Three-minute breaker block. 3-minute for value gap here. I guess this is on the. It still is a 3-minute for value gap. I'm just showing on the 30-second. Okay. So, and then on the lower time frame, so lower time frame we get our 30-second breaker or CISD. I'll just call it CISD. Yeah, I think that makes it more sense to call it CISD. CISD minus, and then boom. You can enter on that, delivering from the breaker down to weekly distribution. We should also show how there was a new, whatever, new day opening gap right here. I believe it was right there. Yeah, it's like within here somewhere. And then we got our 5-minute change to delivery. Honestly, I might start marking out changes to deliveries with like a cross, because it's helpful to know like both time and price on the lower time frame when the CISD occurred. Like, let me show you what tool. Like, I'm thinking like, yeah, like right here. And maybe like just dotted line. Can I do like a text on here? Probably not. But see, now this is relevant because now, okay, we know the change state delivery happened right here. So 5-minute CISD happens right here. And what happens? After we get the change state delivery, we retest this new day opening gap. So delivery has officially switched bearish. So the entry that would have been optimalized entry would have been this new day opening gap. If, like, I don't know, I'm just kind of like being totally hypothetical, right? But like, let's say, like, okay, delivery is confirmed bearish right at this 5-minute change to delivery. Okay, now, now essentially, this marks our like, this marks our reference point for premium and discount. We want to sell in premium, buying discount, right? And we're bearish. 5-minute change to delivery bearish. So what key level exists within premium after the 5-minute changes to delivery? This new day opening gap. It's pretty cool. I mean, I'm just being hypothetical right now, but I'm pretty sure like once we get good enough, we can take trades like this. I'm not gonna say we should go do it right now, but in the future, this is a pretty cool train of thought, right? So let's screenshot this. So this cross, remember, this cross is denoting. Okay, so back to the lower time frame. Oh, yeah. Chart. This white dotted cross is denoting exactly where and when the 5-minute CISD occurred and switched bearish. Switched bearish. You will note that this is a nice reference point for premium and discount. And what happens after we get that 5-minute CISD? We go back and test a key level within premium, this new day opening gap, before expanding to the continuing to expand to the downside. Pretty crazy. I won't be taking trades like this quite yet, but just showing how using CISD and marking it out where and when it happened on a lower time frame chart can be so powerful. So there was that. Now, there was not really quite a 15-minute change to delivery until like all the way down here. So doesn't make a ton of sense. You probably just enter off after we get this 5-minute one, right? But we get another one right here. This one's a little bit more clear. We get another 5-minute CISD right here. This one's a little bit more clear. Breaker, whoops. Let's mark this out. Breaker / CISD. Let's get rid of everything else right now. We'll mark that out again in a second. But we're just showing how, like, by understanding the higher time frame model we're in, we can take higher probability, lower time frame trades towards our draw on liquidity, right? So breaker CISD occurs on the 5-minute right here. I mean, it happens here too, but this one's like just additional confirmation. So remember, we're delivering from this new day opening gap right now. Here is that 5-minute breaker and CISD. Yeah, that's fine. You will note that the one that occurred higher up wasn't super obvious. So let's frame another trade where you are extra patient and you wait for this lower CISD to occur on the 5-minute. I will denote with a cross just like I did before, where and when this CISD occurred. Remember, the key here is that the CISD occurs in line with our already pre-existing high probability draw on liquidity. Okay, so that occurs right here. Whoops. So we'll mark that out with a cross. Okay. So, boom. Actually, I lied. Change state delivery happens right here. Right? Okay. Okay. Okay, so here you can see I marked out that lower time frame CISD with a cross. Now let's jump down to the lower time frame and find an entry within this toward our draw on liquidity previous week's low. So there's where that occurred. Let's hop down to the 1-minute. So here's exactly when the CISD occurred. Here's exactly where the CISD occurred. And so, yeah, essentially we go retest this order block here before continuing lower. But I think it's a little bit more obvious if you just, like, on the 3-minute, right? The 3-minute is really obvious because on the 3-minute, here, let's just get rid of this for now. On the 3-minute, the obvious confluence that we had was this 3-minute breaker block and this 3-minute fair value gap. That was the obvious confluence. So there we go. Breaker fair value gap. That down close candle, this fair value gap. Screenshot that. The most, yeah. Like I said earlier, the most obvious confluence that stands on the chart, at least in my opinion, is this 3-minute breaker overlapping with this fair value gap. At this point, we want to see lower time frame confirmation out of this area to confirm the market is ready to expand lower. So jump down the lower time frame. I think the most obvious confirmation in the lower time frame was one. Actually, no. The S&T happened down here. I think the most obvious thing was we had, this 30-second. CISD after delivering from this area, right? And then you could have your stop loss a little higher just because if you want to be extra conservative, this is a high confluence area. Or you could have it above if you want higher RR, but I don't know. I just kind of want to be conservative. And I just take all off at weekly distribution. There you go. That's a 2-to-1. So I think that's pretty good. I mean, you could even have higher RR, but once again, just be conservative. I would even probably take off half here, honestly, at these lows, because that's a 1-to-1, and then maybe shoot a runner for the weekly distribution level. So yeah, and you can see how responsive the market was to that weekly distribution level. Clearly it respected it. So here you can see that your lower time frame confirmation could have been this 30-second CSD. You could take half off at the lows of the consolidation there for 1-to-1, and then possibly you could leave a runner to the weekly D minus for a 2-to-1 if you wanted to. I would probably take 1-to-1 and get out because I just want to make money. But as I get more experience, I will go for more 2-to-1s and higher ETC. Yeah, I think that makes a lot of sense. Now, yeah, we had a 30-second fair value gap, but I think it's one of those situations where you anticipate that fair value gap to get inversed. Yeah, we do continue down all the way to previous month's low here. So you can see we do end up continuing all the way down to our final targets for the week, previous week's low and previous month's low, after reacting off this 3-minute breaker and fair value gap, after getting the 5-minute CISD. as shown. We'll just show that real quick again. Here's that 5-minute change in state delivery. This was just essentially our confirmation, right? You have two different ones. You have this, which if you wanted to use that one, you could, but the safer one is this one. Clearly, that's obvious change in state delivery. And then there's your 5-minute CSD. And we'll note when it occurred right here. So yeah, here's the CISD. It occurred right here at this blue line. So we're looking for an entry. So maybe you even consider getting an entry just once we hit premium of this area here, right? I don't know exactly, like I'm gonna be getting more experience, but you can see here that this this change state delivery happened here. Oops. Maybe you enter on the fair value gap. Not sure what you want to do here, but yeah, we'll just note out where that happened again. This was at. What's the shortcut to put the cross out? I don't know. So interesting. So like essentially what you're doing is you're looking for a lower time frame entry within this. That makes a lot of sense to me. I mean, I don't know. What do you guys think? Like, if you really do think about it, like, you already know this is a sell model. You get the 5 minute bearish CISD. Okay, and then you can mark that where and when that happened, marking out a spot with time and price of where and when that change state delivery happened. Break that above that. You're looking for the market to go into that area above it, and then um, reverse the other way, looking for an entry within that. I think that makes a lot of sense. I have to use the bathroom, but yeah. If you guys have any thoughts, let me know. I need to wash my hands real quick. Hang on. All right, I'm back. So, okay. What I'm thinking is I like this idea a lot, and I think it makes so much sense. You already have a higher time frame model. You already have a change state delivery, so you know the bias with really, really high conviction. What does that CISD tell you? It tells you a reference point for premium and discount. There's your reference point to look for lower time frame entries. It makes so much sense, does it not? What do you guys think? I don't know. Like, you already have a higher time frame model framed toward a high probability draw on liquidity. The CISD is your higher time frame confirmation, but it also tells you a reference point for premium and discount for a lower time frame entry. Really, really interesting stuff, honestly. I don't know if that makes sense or not. Might just be saying words, but yeah. Um, yeah, I don't know if that makes sense or not. Let's try another example though, just to try it out. Um, yeah, let's try another example. So let's see. Once again, we know we're within a higher time frame model, right? So this is the sell model we're within. And we know we're drawing to previous month's low here. Oh, my phone keeps turning off. It's not even low battery. It's just on low power mode. Okay, I turned it off low power mode. Previous month's low. So we have a sell model framed here delivering from this new day opening gap. And then once again, we get this 5-minute, another 5-minute CISD or whatever you want to call it. And it occurs right here. So now this becomes an SMT and turtle soup model where we had SMT with this high here. We push into premium of the CISD. And yeah, turtle soup, you just turtle soup this high, right? I mean, maybe you wait for lower time frame confirmation. Yeah, probably wait for lower time frame confirmation. Okay. Here you can see we are within this higher time frame sell model towards previous month's low. The two white lines are denoting when and where the CISD occurred. We end up getting an SMT plus turtle soup here at this high. Now I wouldn't necessarily enter on that, but I would wait for lower time frame confirmation. Via maybe this 30-second CISD. I guess if you had that same idea here, you would have lost, right? So, I don't know. It's kind of not, I don't know. It kind of just depends, but. So you could possibly enter on the S&T and turtle soup here, or maybe you'd want to wait for a lower time frame confirmation, like maybe like this. I don't know if that makes any sense, but you know what? Every time I journal, I get a little better. And yeah. Should we try another example? Let's try another example. Wait, for now, I'm not going to necessarily take trades like this because I'm still getting better with these, but it's helpful. It's a helpful to note that every CISD I don't even know what I'm saying. I need to do a weekly analysis and stuff. I mean, this is a good woman at IFG, right? I don't even know what I'm saying at this point. I guess it's not that good because, like, I don't know. We don't really clearly sweep this high. It's like we go a little bit too far above it. I probably want to take that. Oh. Oh, something else that I want to start doing is checking out, just going to regular trading hours and then just marking out the RTH gap. That's pretty sweet. I can just mark that out. So I think we should be drawing to the RTH gap. Possibly the... Oh, because these RTH gaps are true liquidity voids. You know what I'm going to do? I don't know what I'm saying, but yeah. Ugh. Okay. Let's just do weekly analysis now. I might take a break. I'm gonna take a break. I'll come back and do a high time frame analysis. I'm just my brain's turning to mush right now. But yeah. All right. See you guys later.